Ladies and gentlemen, good day and welcome to the Q1 FY23 earnings conference call of Eldeco Housing and Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Bhatt. Thank you, and over to you, sir.
Thank you. Good afternoon to all the participants on this call. Before we proceed to the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risk that could cause future result performance or achievement to differ significantly from what is expressed and implied by such forward-looking statements. Please note that the results and the presentation are available on the exchanges and also on company's website. Should you need any assistance to receive them, you can write to us and we'll be happy to send it over. Now, to take you through the results and answer all the questions today, we have the top management of Eldeco Housing and Industries Limited with us, represented by Mr. Pankaj Bajaj, Chairman and Managing Director, Mr. Manish Jaiswal, Group COO, Mr. Sanjay Agarwal, Vice President, Accounts and Taxation. Now, we'll begin with the call with the quarter highlights, followed with Q&A. And now I would like to hand over the call to Mr. Pankaj Bajaj. Over to you, sir.
Good afternoon, everyone. This is Pankaj Bajaj. I welcome all the participants to Eldeco Housing and Industries Limited Q1 FY23 earnings call. Let me start with brief comments on the real estate market. I believe you already have the results for these, so I will just give a brief background of the market. And after that, I'll touch upon the operational and financial performance for the quarter. So, India's residential real estate demand remained unabated during the quarter despite the global and domestic disruptions, which include the Ukraine war, the increase in interest rates, increase in input costs, etc. During April-June 2022, the demand remained solid in spite of these factors as suggested by the steady flow of number of inquiries for our projects. Because of the increase in demand, unsold inventory across cities, including Lucknow, has come down during the last few quarters. So from the inventory overhang to a short supply situation, it has turned around in about 4 to 6 quarters, the last 4 to 6 quarters. This has enabled developers to pass on the increase in cost to the customers. Moreover, the established brand names are able to command the premium in their respective markets. With this background, the business economics of leading developers look comfortable and have a cushion to withstand input price shocks. Talking about our operations, during the quarter, we have successfully handed over 1.1 lakh square feet with the registration of 78 homes. The collections continued to remain strong during the quarter and stood at nearly rupees 50 crores. Strong demand in real estate sector has consequently pushed up land prices also. So our challenge right now is to purchase land at a suitable location and rate. However, we are confident of adding at least 3 new projects within this financial year to our development portfolio. All our current projects are progressing well in terms of execution, sales and collections. We are confident of completing all of them within or before the RERA timelines. In the current quarter, we are also going to apply for approvals of a group housing project in Eldeco City, either GH4 or Crest, whichever comes first, and also phase 2 of Eldeco Imperial project. I would now like to move on to our recent financial performance. The revenue from operations for the quarter stood at rupees 27.6 crores compared to 15 crores last year in the same quarter. Last year, this quarter was very low. It was a low base because of the COVID wave. And this quarter has also been slightly low for us because of lower completions. The EBITDA was at rupees 11.3 crores compared to 5.1 crores last year. The EBITDA margins were 40.9% compared to 33.9% in Q1 of FY22. The PAT stood at 10.1 crores in Q1 FY23 compared to 4.7 crores in Q1 FY22, witnessing a robust growth of more than 100% year on year. With this short comments on our results, I would like to open the floor for questions. Thanks.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait on for a moment while the question queue assembles. The first question is from the line of Abhishek Agarwal from Prithvi Finmart Private Limited. Please go ahead.
Yeah, hi sir. Sir, can you throw some light on the inventory status of Lucknow market as a whole and how we are placed in this market? And secondly, I want to know, are we looking for any opportunity in the other geography apart from Lucknow market?
So I wouldn't know for sure the exact number of inventory, and because most of the companies other than ours in Lucknow are not listed. So that data is not in the public domain, but I would guess that the unsold inventory is not very high, not more than 2,000 units in all of Lucknow. And consumption, the offtake is nearly that much. So it's less than a year's supply that all of Lucknow market has right now. So it's a short supply market with very strong demand. In that background, it makes sense because traditionally we are a Lucknow company to add projects in Lucknow, for which we are working hard. And I've already said in the opening comment that we are going to add projects this year. Unfortunately, this is not the quarter where we can officially declare. I would not like to make a premature declaration of what projects we've added, but we've proceeded far enough to be confident to say that we're adding projects this year.
Mm-hmm.
With that background, Lucknow in UP is the most attractive right now.
Mm-hmm.
So if you were in the previous Concall, you would have this question comes and we have said that we are going to go outside also.
Mm-hmm.
As of now, Lucknow looks the most attractive market. Mm-hmm. But if you remember, we have a presence. We have taken tentative steps in Bareilly. So we are thinking of rolling up the Bareilly project into the main company by having a majority stake there. But since it's a related party transaction, we want to tread very carefully there. So we have appointed an external agency, one of the big four ones, to advise us there, and based on arm's length kind of valuation. So once that comes, then Bareilly will probably, and with due approval of course from the bodies and even our shareholders, we will probably have a bigger presence in Bareilly. But as of now, our whole focus is to add projects in Lucknow. I think that it can take a number of new projects, not just 3, because of the inventory short supply in the market.
Okay. And sir, my second question on the revenue visibility and cash flow visibility. If we look at current project and the ongoing project, what we see is current area is around 5,25,000 around, and the forthcoming project area is around 13 lakhs around. So which gives the current realization of 4,000 square feet, we have the revenue visibility only of 750 crores. Okay. So how you are guiding this revenue things in the? I think this all the project will get completed in next 7 to 8 years at most.
No, it's not going to take that long. First of all, if you look at our historical numbers, last year was our highest selling number last financial year in terms of fresh sales, which were about 200 or 220 crore rupees.
Okay.
And as you rightly pointed out, the current pipeline is about 750 crores. Mm-hmm. So that in itself is about 3.5 years of of project pipeline in place, and to that we are going to add more. So I'm not too worried. It looks a little thin right now, but I've assured in our previous con call also that before this gets exhausted, we are confident of adding more. So we hope that the new benchmark which was set last year, we don't dip below that, and we only increase from there.
Okay, sir, because my concern is only on the cash flow part, because as per my understanding, if we have the 750 crores of revenue, then the cost will be around 50% of that, okay, including land cost and everything, okay.
Right.
So cash flow will be around 370 crores, 350 crores around, okay. So our NPV is not that much to get the value in the market. That's the only concern what I have.
No, there are land banks that I don't know if we have.
I'm just talking about on a presentation basis, sir.
So there are other land banks which are not at a project stage, so they have not been declared. There is the NPV is much higher, but obviously that's not a number that we declare.
Okay.
And there is enough cash flow to support a much higher NPV.
Okay. And sir, the last question, it will be helpful if you can share on the next presentation what the land bank we have, so that it will be better to calculate the NPV. And secondly, do we have any inventory in the completed project or any realization to happen?
That I think is there in the investor presentation. Inventory of, if it is not there, we will. I don't have the investor presentation there, but we routinely declare that, and if it is not there, we'll make sure it is there.
Okay, sir. Done, sir.
Yeah.
That's from my end.
Thank you. The next question is from the line of Agastya Dave from CAO Capital. Please go ahead.
Hello, am I audible?
Yes,
you are.
Hello, Pankaj, how are you?
Good.
Sir, just a clarification. You said that you'll be, so you have clearly said 3 new projects will be added this year. And then did you say that actually there are much more, the pipeline is much longer and more projects will be added, or am I confusing something?
So it is a bit of both. If you look at page number 17 of our investor presentation.
Right.
So we have
the forthcoming projects. Right.
The forthcoming. These are lands which are already there. So they are in various stages of approval, and we are going to launch at least 2 or 3 of these in the coming quarters within this financial year. Within this list, now this list is 5 projects long.
Right.
But this list also is going to get increased because we are adding more land. But they are not at a stage where we can say that, it is,
I understand.
Some could be at term sheet stage, some could be at MOU stage, some advances have gone. And, in real estate, sometimes these do not fructify. So we don't want to give premature kind of...
So, sir, my question was actually exactly on this slide. So, on this slide number 17, let's say by the end of this financial year, when you say 3 projects, we are talking about 3 projects out of these? These 5 will become 8?
Both will happen.
Both will happen. So, 3 of these projects will become available for booking, and they will shift from slide 17 to slide 16 as ongoing projects. I'm talking about actually year.
Yeah.
Right. So 3 of these will shift to ongoing projects, and then some new projects will get added here.
Subject to our
approvals.
Of course. But yes, that's what our operating plan is, and that's what we are working towards.
Right. Sir, in the previous con call, you had mentioned something about plans to double the revenue, and what the previous investor was asking. That given the visibility that we have today and what you did last year, the 200 to 220 odd crores. So when you said in previous con call that you're looking to double the size of the company, can you give some further clarity? Has the visibility on that guidance improved? Have the timelines become more clear to you? Any addition that you want to do to that?
I would only be able to give a long range kind of answer there. That in the next 3 years, if we have not doubled, I would be very disappointed. So it could be before that, it could be 6 months after that, but in 3 years, definitely we should have doubled from our current size, if not.
And so when you say double, do you mean this delivery of like around 200 to 220 crores, which you did last year, that becoming 400? Is that what you mean?
Yeah, every metric actually.
Every metric.
Yeah.
Okay. Sir, can you quantify the price increases? You had previously mentioned, I think 2 quarters back, that the land prices were up by 40%, if I'm not mistaken. I could be wrong about which quarter you said it, but you said something about 40%. So, can you again give some idea as to what has happened subsequently to land prices?
So the big jump happened a couple of quarters ago, and it's maybe another 5 to 10% increase in the last quarter, and it's been flat after the last quarter. In fact, I sense the pace of increase of land prices has softened. It really shot up. It was flat for a number of years. It shot up. It corrected immediately after the unlock happened, and then the pace has softened. It's in the last 2-3 months we sense that it has kind of become flat.
So now that this, at least the first derivative, has kind of changed, is it now probably more desirable to have a land bank, a bigger land bank now? Because you had again said that probably by the time the prices of land kind of stabilize and you have confidence that the market is sustaining, you would look to build a 3 to 5 year land bank. So, are the conditions now justifying that kind of action from the company?
Yes, they are. That's why we are saying that in slide number 17, we are going to add 3 more. So that is going to be the number 1 to 5 is going to become 1 to 8. Right. We are going to add more land, and 3 of these will move to the other slide. So it's going to come back to 5. So we are going to add 5. Yes.
Thank you so much for clarifying, sir. And one final question, sir. Obviously, last 2 years were greatly impacted because of the pandemic, and on the approval side and on the pace of construction side, just the activity levels, even though the demand was very high, supply was a constraint for a variety of reasons. Has that kind of sorted out itself? Are the approvals now coming at a faster pace, or is it still taking upwards of 9 months to get approvals? Is there like any bottlenecks which we were facing as a company? Has anything resolved itself which could aid in increase in pace of execution or launches from our side?
So unfortunately, no great feedback on this one. The pace of approvals does continue to be slow in UK. It's not company specific. It is what it is.
Yes.
There's a governance issue. It's how approvals are done in India, and just to launch any project, you need at least 10 major approvals and then another 15 minor ones.
Right.
So that's what takes time, and that does take 6 to 9 months. There's nothing new to report there. That's why the 5 projects that we want to launch, 3 out of those. These are lands with us. These are fully paid lands. There are no title issues. They are in conforming land areas. But it's still, we are not able to launch them primarily because of approvals.
Right. So that continues to be a bottleneck.
There's no red flag there that, why approval will not come.
Yes.
It's just
it's a systemic issue. I understand, sir.
It's a cumbersome and sequential procedure.
Right. One final question, sir, which I forgot to ask. Any comments on affordability of houses in Lucknow segment, in the Lucknow market? Are you still comfortable with the affordability of properties there?
No, very much. I think very much. So our average realization this quarter was rupees 4,300 per square foot. This is very much affordable range. I think I would not get worried till it reaches 5,000 or 5,500. So I think there's still quite a lot of room there.
5 to 5,500. So thank you very much, sir. All the best, sir. Thank you for your hard work. Thank you.
Yeah.
Thank you. A reminder to our participants, if you wish to ask a question, you may enter star and 1. The next question is from Yogansh from Mittal Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity.
So one question on the change in strategy, if you have any. For example, in past, if we look at the kind of saleable area that we have launched so far, was usually in the range of 20,000 square feet, then 40,000-50,000 square feet. While of late, the Eldeco City we launched at a bigger size of 8 lakh plus square feet and 3 lakh plus square feet. So going forward, the kind of projects that you are now looking at, or as a company that you guys are not now considering, are these again similar to our 50-70,000 square feet area, or are we now looking to have bigger projects, say 3 lakh, 4 lakh, 5 lakh as a single project?
It's the latter, not the former. So just to clarify, our model largely is a township model. So Eldeco City was a big township by our own standard. It was about 133 acres, I think. Now within that 133 acres, it's like a mother project which keeps spewing out daughter projects. So within that there is a Twin Tower project, within that there's a Eldeco Dreams project, within that is Eldeco City Breeze, and GH4 and GH3 Crest are also within Eldeco City. But it also has a plotted development component which looks large. So going forward, we are looking at aggregating land in the region of 20 to 50 acres. And they would in turn act like mother projects and will start spewing out smaller projects when the mother project becomes mature. So it's a combination of two, but largely if we are taking a standalone project, I don't foresee us taking anything less than 2 to 3 lakh square feet, a standalone project. But if it is a project which is part of a mother project, then of course there could be a small local shopping center within a township which could be much lower.
Right. And so you did touch upon the pricing scenario and the reduction in overall inventory from an overhang to now a short supply. Could you also give some example in terms of how the prices are moving in the Lucknow region, and what is the trajectory like going forward as per you?
So much like the land markets have corrected upwards, so have the selling prices, especially in the segment that we are working, which is row housing and plots, not so much in apartments. So, for example, our Saubhagyam project or our Twin Tower project or Eldeco City Breeze project, the pricing have gone up by 10 to 15%. But in our plotted or row housing kind of products, there the increase has been as much as 40 to 50%, which is almost mirrors the increase in raw land prices. So that has been the kind of increase in the last 12 to 18 months. 18 months. In the last 18 months, it's been about 40%.
Okay. So another question is on the construction cost. Given that last year has been a difficult one in terms of higher steel, cement, everything. Going forward, do you see that higher raw material affecting your margins in the upcoming projects, or do you think that is fairly taken care of in the realizations that we are now charging?
Our construction cost as a component of our total sale is not more than 30 to 40%. So even if it increased by 20%, that is an impact of 7 to 8% in our overall scheme of things. Now, that kind of price rise is transmittable to the market. So I'm not too worried about it. Obviously, I would prefer a lower construction cost to a higher construction cost, but we can't help construction costs. We can't help commodity prices. They are what they are. But it's not that it comprises 80% of our cost, and it's very sensitive in terms of the end pricing is not so sensitive to this movement. The other big movement is the rate of interest. You not asked that question, but these are the two important costs for the customer to consider. But we find that in both these cases, our market, because of short supply situation, it's able to any increase in costs that we want to pass on to the market, and also the banks are increasing rates of interest on home loans. The market is shrugging it off as of now.
Understood. That's really helpful. So one last question from my end. So far our company has surplus liquidity or cash. So going forward with the kind of projects you have in pipeline, and considering these are bigger compared to what we have done in past, so
are we also open to taking on debt in this entity as well and growing the balance sheet, or do we want to stay conservative here and not bring on debt in this and just continue with the cash flows that we have?
Yeah, judicious capital structure is very important, and not taking too much debt is a good thing in terms of a judicious capital structure. But not taking any debt is also not a good thing if you ask me. So we are going to be taking debt selectively, and we don't completely equity-driven company. Right now, we are building a war chest. We've been building it for the last couple of years. We have substantial cash surpluses, which we are going to supplement with judicious amounts of debt, not only for construction finance, but also for land acquisition. So we definitely look forward to a judicious amount of debt going forward to fuel our growth.
All right. So any numbers that you would like to share, or is it too soon at the moment?
It depends, because it depends on what kind of projects we take on, and we have appetite. But they should be, if it is a good enough project which requires, so it depends how many. In response to one of the earlier questions, I said we are going to add 3 more projects. I'm not in a position to share further details because the contours are not yet finalized. But depending on the quantum, the debt number could increase or decrease. But definitely, I don't foresee, as of now, a debt equity more than 1:1. Right now, we are 0 practically.
Right, sir. That's it from my side. Thank you and all the very best, sir.
Thank you. A reminder to our participants, if you wish to ask a question, you may enter star and 1. Our next question is from the line of Aditya Mehta from AB Advisors. Please go ahead.
Yeah, hi, sir. Thank you so much for taking my question. Am I audible?
Yes.
Yeah, sir, I had a couple of questions. So my first question would be on the collections. As the collections for the quarter were, quite flattish sequentially, what can be this trend going forward?
So they were flattish because we didn't have any new launches. So they were basically collections from our old bookings, and those bookings are already done. So they will remain either flattish if we take out the 3 launches that we intend to do this year. The collections old projects will remain at this year, which is a 200 crore annualized. So that's what it's going to be. But depending on what kind of projects we are going to launch, this is going to go up gradually. I've already said what our target for the next 3 years is, just to double the number.
Okay. I understand. And I guess I missed that answer you gave, but then I would like to know the actual number of the free cash flow generated during the quarter.
I didn't understand the question.
So what was the free cash flow generation during the quarter?
Free cash flow. So I don't have that number. Sanjay, can you give that number if you have it with you?
Cash flow number is the collection from the customer itself, and there is no non-cash expenditure. It's a barely minimum depreciation. So whatever collection is there, it is operational cash flow only.
Okay, sir. Understood. That's all from my end, sir. Thank you.
Thank you. Our next question is from the line of Harmit Desai from Pendulum Investments. Please go ahead.
Good afternoon, sir. Thank you for taking my question. I hope I'm audible.
Yes.
So my first question to you is, could you provide a ballpark figure, your sales guidance for the entire fiscal in square feet?
No, it's too early to provide that. We are trying to launch 3 projects this year. So that depends on the. We don't know when we will get the approval and when we will be able to launch. So maybe next quarter we'll have more clarity and we'll be able to give you that.
Oh,
right.
Certainly.
But it's not with me. That number.
All right, sir. Thank you. So my next question to you is, does the Lucknow market have enough demand?
Okay. I wanted to apologize, Armit. Sorry, the real estate is a it's not a quarter-on-quarter business. So I'm unable to actually, say that when I'm going to be able to launch that project. It could be this quarter, it could be the quarter 4. So that number depends on when we are able to launch it. Sorry, sir. Carry on.
Okay, all right, sir. Thank you for updating, sir.
So my next question to you was, does the Lucknow market have enough demand? And are you looking at diversifying to other parts of the country just to provide a hedge against the Lucknow market?
I think Lucknow has enough demand and more. I think it's a short supply market, and it's one of the emerging new economic magnets of the country. Just like where Pune and Bangalore and many of these newer cities were about 20-25 years ago, that's where Lucknow is. And it's, in my view, this is going to grow very fast. The kind of infrastructure investment which has happened in Lucknow, the kind of growth that UP is seeing over the last 4-5 years, and it's a big place. It's an administrative town. It's a capital city. So it has got enough demand to sustain a company of our size. Having said that, we are also, I've already answered that question a couple of times earlier in this call. We are looking at consolidating our stake in the Bareilly market. So that is definitely on the card. And if we are not able to deploy capital within the Lucknow market, then we will look outside also. But as of now, it looks that Lucknow is big enough for us to be able to deploy the reserves that we have on hand and plus some debt. So we are very bullish about Lucknow as of now.
All right. Thank you so much. That was my time. Thank you for taking my questions.
Thank you.
Thank you, sir.
Thank you. Any participant who wishes to ask a question may enter star and 1. As there are no further questions from the participants, I now hand it back to the management for closing comments. Over to you, sir.
No, I have nothing more to add. Thank you, gentlemen, for your interest in the company and your support. So I'll see you in 3 months' time. Thanks a lot.
Thank you very much. On behalf of Eldeco Housing and Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.